Welcome to ForexTV.com. Today's Monday, April 20th. I'm Tim Kelly with the New York Forex Market Buzz. Dollar is on a tear today, punishing the euro, British pound, Canadian dollar, Australian dollar, but weaker against the yen as U.S. equity markets are sharply lower. Gold is gaining and oil is also down sharply, reflecting intermarket correlations not seen in a few months. Now for a look at the latest headlines. The index of U.S. leading indicators fell more than expected in March, posting a 0.3% month-over-month decline, that according to the Conference Board. The consensus had forecast a 0.2% decline. February's decrease was revised up to negative 0.2% from negative 0.4%. Over the last 6 months, leading indicators have fallen 4.9%. Now, over in the ECB, ECB's Nowotny says key rate close to the lower limit. The European Central Bank's key policy rate is, quote, close to its lower limit and should not fall too low. That according to ECB Governing Council member Ewald Nowotny. Echoing Nowotny's statements, ECB's Bini Smagny says rates very close to the floor. And that coming from the Central Bank Executive Board member Lorenzo Bini Smagny said the ECB's key policy rate is very close to its minimum level and dismisses fears of deflation within the Eurozone. The central banker also said he does not see a risk of deflation and warned against, quote, exaggerated deflation fears, leading to rates being brought down too low. Well, today we're joined by Jake Oubina, currency strategist at Gain Capital. Jake, thanks for joining us and thanks for wading through the headlines.
Happy to be here.
Well, Jake, we see, as I said in the intro, I think we're seeing a bit of a return to some correlations driven by equity markets. Dollar up strongly in a down equity market. We have gold up and oil down. Right now, we see some big gains for the U.S. dollar, albeit against the yen. Wanted to talk about the broader picture, though, and kind of get your thoughts on what's happening here. Is this just an earnings season jitters, in your opinion, or something else going on?
Yeah, I think it's a broad, obviously a pretty broad shift to more risk-averse assets, and we saw a little bit of warning signs last week when the equity markets failed to elicit any kind of material gains, despite I would say a better tone to U.S. economic data and bank earnings beating by about 27% on average. Markets only managed to eke out a 2% gain. That was sort of ominous, and that we saw the U.S. dollar resurgence hit really overnight was not entirely unexpected. But yeah, you're right. I think we're getting back to those equity market correlations with FX, where the yen crosses become heavy as stocks get hit, and then the commodity currencies, in particular Aussie and Canada, get slammed as oil takes a beating as well on the back of the equity sell-off.
Well, we gapped up last night. I was looking at markets last night. We gapped up in a lot of the majors, even in Aussie, gapped up against the dollar, and then just started a straight line down. Right now, we've got just a weakness across the board in all the U.S. equity markets. In terms of just doing a quick data check, Euro 129.14, that traded in a range of 128.86 to 130.61. Do you think this is a little overblown at this point, or just overdue?
I think it's a little bit overdue in terms of the euro. I think euro's been under pressure for a while now, despite equity markets rallying. I mean, it was up against the dollar about 5% on the back of the Fed's quantitative easing announcement back in mid-March. But since then, it really hasn't done anything, and it's actually ground lower against the dollar, despite the stock market being pretty buoyant. I think as the risks of ECB quantitative easing become more and more prevalent, and we continue to hear members of the ECB talk more about this, quote-unquote non-standard measures that they're going to discuss at the May meeting, I think the euro continues to come under more pressure. I think keys for the euro this week are going to be the PMI reports. They have a forward-looking nature, and if they fail to reverse higher, I think it's going to weigh on the euro some more. The eurozone seems to me to be a couple of months behind the United States and the UK, for example, in terms of economic weakness, and that'll be reflected in the currency.
Jake, there's a lot of talk also about some dissension within the ranks of the ECB. Do you make anything of that, or you think this is just a media a play at trying to find some kind of chink in the armor there? I'm not sure. I see it. I see a lot of the governors right now saying that they're near the floor here, but I have read some reports out and seen some analysis that perhaps the coalition is a bit shaky as we go through this really rough patch here.
Yeah, I mean, clearly there's some differences in philosophy when you look at the group as a whole, but I think what they're really preparing us for is a moment where they're going to stop lowering rates, and potentially that looks to be about 1%, and in an effort to sort of prepare the market for some kind of quantitative easing measures. I think that's really what's been behind sort of the dissension from a couple of guys there.
Okay. Hey, Jake, do you have any sense of where you might see euro in the next couple of weeks leading up to the May meeting?
Yeah, I mean, I think if they do announce some quantitative easing measures that are aggressive enough for the market to see that this is going to be dilutive to the currency, I wouldn't be surprised to see euro back down to the 125 support area. We saw what these kind of QE announcements can do to a currency. I mean, witness what happened to the dollar. The U.S. dollar index dropped about 4% when the Fed came out and announced they were going to buy long-term treasuries. I would expect just as violent of a reaction in the euro if the ECB comes out with some aggressive stuff.
Well, we've got a couple of weeks till then. What happens? Are we going to just play this momentum downward, do you think?
Yeah, I think it's going to continue to grind lower here. We saw a couple of good hourly channels in euro, and they continue to get steeper, and we're building new and steeper channels to the downside. Short term, I'm looking for some support into 128.40. Probably get a little bounce there, and then once we go through 127, then I think it's going to be pretty lights out until you hit that 125 barrier.
Okay. Jake, you know what? Why don't we shift gears here? We're talking about risk aversion here. You mentioned it before we came on air. Maybe we give some attention to Aussie dollar, Aussie yen. What's your take there? That's probably one of the biggest losers on the day against the dollar today.
Yeah, absolutely. And Aussie has been actually one of the biggest gainers on the back of the whole stock market rally that we've seen over the past few weeks. Aussie dollar was up about 15 to 18% versus the U.S. dollar since stock markets bottomed back in March 9th. And so it's really been well correlated with equity market gains. And I think the story behind this is that equity market gains have led to a surge higher in oil prices as well. They were comfortably above the $50 level for a while there, and Aussie was just ripping upwards of 73 cents. Now that the equity markets have fallen out of bed here overnight, I think Aussie's correction is just as sharp, and you're likely to see that correlation play out for a while further here.
So, if earnings are not, right now we're at 69.79, near session lows. This has been a one-way trade for the past 14 hours or so. But, with this equity markets going through, I think this week we have 800 companies. So this is the bulk. This week is the bulk of earnings, and it's not expected to be that positive. So can we continue to see this kind of movement in Aussie going downward here? We're almost we're about 250 basis points off the session high right now.
Yeah, I mean you can always see some short-term bounces, right? That's the nature of the Forex market over the last few months with all the volatility. But I would say that the overall direction remains decidedly lower for the commodity currencies and stocks. There's just a lot of risks on the horizon this week. Not only do we have earnings from multiple companies, we have 32 financial companies that fall within the S&P 500 reporting, multiple credit card companies reporting, and credit card delinquencies has been something that's been on the radar of a lot of traders as sort of the next shoe to drop in this whole financial crisis. And then at the end of the week, we have the stress test assumptions will be released. If the market decides that those weren't aggressive enough, then it's going to essentially decide that the stress test is meaningless, and that could weigh on financials as well.
Jake, there's a lot of discussion about correlations and movements. Fundamentally, where do you see Aussie right now against the dollar? I mean, from a fundamental basis, from the two countries standpoint, where do you see fair value in Aussie?
Yeah, I mean, fundamentally, I think it should probably be higher. They weren't nearly in as much trouble as we are with the financial crisis. Their economy is clearly not slowing to the pace that ours has. And the interest rate differential remains decidedly positive towards Aussie. Short term, you're going to get a lot of these sell-offs based on the commodity complex unwinding off the back of an equity market sell-off, for example. But I think longer term, and once and if inflation worries start to emerge in the U.S. Into the third and fourth quarter, then I think Aussie and Canada and other commodity currencies are going to be a better position to strengthen against the U.S. dollar materially.
Okay. Right now, I want to finish up with Jake with dollar yen. We're right now 97.83. That also has seen a lot of volatility overnight and has struggled with that parity figure. What's your take there?
Yeah, I think overnight the big thing was we really broke that 200-day, which was sitting around 98.80, and then we've seen a lot of the yen crosses come off just based on the equity market turning lower. So it's been under pressure there on that front. What's managed to hold it up is the dollar strength. I think we still favor buying dollar yen on dips. The Japanese economy is just in dire straits. They have their trade numbers coming out this week. They're likely to continue to show further deterioration there. So yeah, I mean, I still like it. I still like dollar yen higher from here, but I wouldn't rule out potential dips based on equity market sell-offs on full-blown yen cross-selling across the board.
Okay. Well, the message seems to be beware of volatility right now.
Absolutely.
Yeah. Well, Jake, thank you for joining us today, and thanks for coming on to the program.
My pleasure.
This has been your New York Forex Market Buzz with Jake Oubina of Gain Capital. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.